Welcome back to Florida Relocation Weekly. I'm Adam Hancock, and today we have another action-packed episode to keep you in the know about all things Florida real estate market. If you missed the first episode, make sure you catch up on that in your leisure. But for now, let's dive into what's in store for today. First up, we are taking a deep dive into the latest market trends for buyers and sellers. How has the transition from the COVID era to our current market here in 2024 affected you? We will break down the key shifts and what you need to know to stay ahead. Next, we're giving a fresh look to the suburban market in Southwest Florida, including areas like Lakewood Ranch. If you feel like you have potentially passed on deals before, now might be a perfect time to revisit them. With the surge in new construction building overall, we will help you compare and find the best options. For those eyeing new construction in South Sarasota's Palmer Ranch, but really struggling with the limited options, we have some great alternatives for you. And in addition to that, if you happen to be someone that is intrigued by the idea of areas that are not that close to anything, but kind of close to everything, I wanted to highlight some hidden gems on that front as well. And for this video, that doesn't even cover everything we're going to discuss today. So this one is really packed full of value. But before we get started, I did want to remind you, if you've not already done so, to sign up for the new Florida Relocation Monthly email report. This free 30-day report is the absolute best way to stay informed when it comes to the latest buyer incentives on and off the market. Quick move in homes, interesting resale opportunities on MLS and on Zillow right now, and everything I'm thinking through at the moment. No spam at all. This will be one email a month, and it is bite-sized Florida real estate market updates. The link is in the description box below this video. Without further ado, let's hop into our first topic.
And you could be watching this video and have fresh eyes. Maybe you're just flirting with the Florida real estate market for the first or second time. But a lot of people watching the video probably at the same time have a very intimate memory of 2020, 2021. And now we're sitting in June 2024, and one of the biggest juxtapositions in history of that 3-4 year gap of time. So really what I'm interested in is the material changes that existed amongst it, and more in behavior and feel. So I'm going to give you some thoughts there. One of those is that the urgency. People in general are waiting. They're a lot less urgent, and that's consistent. That's not just a drop in the bucket anymore. That's not, we had like 2-3 years where Q4, everybody paused and they jump back in Q1. I've seen it being really, really consistent. People are waiting for what's going to happen next. They're waiting for what other people are going to do. They're waiting for what builders are going to do, and they're waiting in general. One of the things that left the market in a healthy way was the full sense of urgency. Not completely, but in a grand way. That a lot of people 2 years ago did things way before they wanted to, faster than they wanted to. And a lot of people made a ton of money for taking that leap, and some people had regret. Regardless, a buyer is always in a better position to make a poised decision. You can't get a lot of opportunity if you can just call your shots. But having that level of aggressive nature of the urgency, I don't think is healthy for anyone. A second thing is that, if you haven't lived in Florida forever, then people don't think about a ton anymore, is that, yes, Tampa Bay has an industrious nature. It's a hub. It's a city. People move for work. They move for school. But Sarasota and Naples forever have always been a place that people really didn't need to do anything under a timeline they were uncomfortable with necessarily. They did things when they wanted to. It was retirement-based. Beyond 1031 exchanges, no one needed to get here to start a job. So because of that, in a less urgent market, we've seen a lot of that return, basically, right? Like even people looking at homes, they'll overlap it with a vacation. They'll overlap it with seasonality of snowbird season, like November to February maybe. They're going to look at homes while they're also in a rental or in their snowbird place. But it just in general, we've seen like a normal like ebb and flow of what the market used to be has returned a ton. And then that goes hand in hand with the resale market as well. People listing homes. We forget that the median cost in Sarasota has never been near $1 million. We're just recently got over $500,000 as a median cost, but everything in Southwest Florida doesn't cost a fortune. Those are anomalies, and it's become more consistent than anything, but the median cost has never been there. So because of that, $1, $2, $3 million properties, even $850,000 properties, they're typically not flying off the shelves. They're taking 1, 2, 3, 4 months to sell, and the big stuff are taking a year possibly to sell because the buyer pool is a lot smaller. Well, we got used to that everything was selling in under 10 days, so people are starting to freak out, and they're doing weird things with listings, and they're trying to orient and discount and stuff like that too early because they're still resting on the laurels of what used to happen, and we're still seeing people price things at what they used to be. The big difference is now people don't care. People need an economic backing of why they should do something, And a lot of times people want to win. They want some level of discount, or they want a reason to do something versus waiting for a build. But that's what always happened in history, right? If there's a bunch of new construction around resale, it affected the resales. So we're returning a lot to that market. Now, with all that being said, I think one of the things I don't hear people talk about a lot is the overwhelm that can come with too many opportunities. Because all I talked about was leverage for buyer, which again, fantastic thing, right? We focus on relocation buyers 99% of the time. So the more options you could have to make a decision that's right for you, I think is better. But what you're sitting with now is the decision of really what to do now versus what to do later with no crystal ball, which is tricky. Because now you can go into a circle on a map and say, I want to be in this part of Florida. And you could say, well, okay, I got these 3 to 4 new construction options, not one. Now they're building in 10 to 12 months, not 18. So this feels real. And then I also have the inventory on resale homes that I did not have. So now there's 3, 4 neighborhoods I didn't even know existed because there's no Zillow market exists too. So now I got 6 options I can compare against each other. Well, and same with builder incentives. These builders are offering me all this money. So everything I just mentioned exists now for me, a real opportunity. But then you're saying what am I missing if I don't wait? If I wait, if the builders offer me all this money now, it seems like they need it. Are they going to offer me more? Are they going to offer me different stuff? Is the inventory not going to be greater and I'm going to have more leverage on these? Am I not going to have more discounts on the home I was planning on building, all that kind of stuff? So you're saying, if I do it now, am I going to miss out on what I could do later? Or should I just do it now and not have another winter in New Jersey, right? That's a tricky decision. So what I would say with all of this being said, my answer is simple, is that I think this goes back to old school real estate rules. The big thing options give you, as confusing and convoluted as it can be, it lets you choose what's right for you. It lets you change the level of priority of saying price first, go second. It lets you say, where do I want to ideally be? Where do I want to live for the living reasons? And then can I economically and physically, house-wise, can I match it? It's way easier to do that than it used to be. Where I felt like where do I want to be, a lot was taking a second tier when criteria simply moved you out of the market you even wanted to live in totality. Now you can pick where you want to be on a map and have a fighting shot that you can make that come true. That's where I would bump everything against, because what you got to do at the end of the day, and I can't do it for you and I can't tell you, and I would be terrified to do so because you'll be mad at me in 2 years, which is my golden rule, is you got to have no regrets, and things are always going to change. Like your neighbor's house being discounted after you buy yours, it's a bad place to live in your mind. So I would say that's the only thing you got to get right. You got to get right on being give yourself not a reason to look back, right? So you got to see what's more important, right? You're not going to do that other winter in New Jersey. There's the taxes there. There's the no state income tax there. There's the insurance overall is an issue. Where do you want to be and how can you feel good about it? Even if 6 months from now, your nightmare came true that they discounted it further, they offered more. Net in mental score and fiscal score, would you be okay with that? If you can get that right or half right, I think you'll be happy you did so. And all I'm trying to do with my business is provide enough unstructured and structured data where you personally, you and your family can make the right decision. Lakewood Ranch, Florida, million communities, the bat at a ton. And I even said this a couple of years ago that it feels like it's super abundant, right? There's resale, there's new, and there's a bunch of communities, but you get down to your criteria and you start to boil it down. You add price and square footage, type of home, you add the area of Lakewood Ranch. You throw schools in that mix, amenities, and most people, there were actual 3 communities of all of the communities that were apples to apples that they were seriously considering. It really wasn't the case, And then you start to get to individual districts that got even weirder. Like, for instance, you get to Waterside in 2021, maybe, be a good guess. And everyone loved Waterside. Everybody loves it now, but everybody definitely loved it then. It was the new kid on the block. If you didn't have school-aged kids that were in middle school or higher, that you wanted to go to public school, then, this took away that really far from downtown Sarasota thing that was the traditional knock on Lakewood Ranch. But it gave you all the great things about Lakewood Ranch. It gave you one, Waterside Place, which is this new downtown that they're going to build that looks really sexy from the renderings, and maybe there's some walkability to it. And then the downtown Lakewood Ranch isn't that far too. And then you got all the activity on University and University Town Center. So it was like the best of the suburb and also not that far from the town where you're like, this is better mousetrap than anything, But then you get over there, and for a long period of time, you had 3 neighborhoods, and one was Windward. So it was back in the day. It was very family centric or empty nesters. So either like $250,000 villas, which you don't want to look at the price now if you missed that opportunity. I should have bought all of them. I think I still have videos back in the day that I was screaming from the rooftops for everybody to buy it, but I didn't know it was going to turn into that quite. But it was really family centric because it gave you that family style house. It gave you 2,500, 3,000 square feet. And it was a lot of affordability. Even their huge houses were $750K. And then you're like, that doesn't quite work because I want something a little nicer. Or I don't need all that. Or I clearly there's going to be a lot of kids at this pool. And these are some of the conversations that were had because it was pretty obvious what that neighborhood was going to be. Then you looked at, then they had Shoreview, which is Pulte, which still exists, obviously, but at the time, like, there was one of three, and Shoreview was an unbelievable piece of land. It was only 200 something homes. I think technically at one point the homes were further from each other across the board than any other neighborhood in Lakewood Ranch, something like that. There's some statistic of that about like the way it was laid out, but it was amazing proximity. It was the closest one in all of Waterside to where Waterside Place was going to be. And it was just a beautiful piece of land, huge lakes, all this kind of stuff. However, it was Pulte, which traditionally was not building homes at that price point across like what people were used to, especially outside of the state of Florida. So a lot of people that bought with me in there, bought because they really loved the land. They were like, I can deal with the Pulte thing. And there's nothing it's not to knock Pulte. It was just the most biased minds of the people. That was the feeling there. And then, obviously that didn't work for everybody because they just couldn't do it. They wanted much more of a house, much more of a custom house for that price point. And then the other alternative to that was another peacock, and that was Lake House Cove, which I mentioned briefly, but it was Homes by Town and most of the lots. That was kind of the master developer, like Toll Brothers-esque builder. They had a bunch of models on site, but it was kind of weird in that, and they had this model called the Tideland, which I really liked, but it was kind of weird in that they're kind of eclectic, all the models. Like I brought a bunch of people through there. They had like the Outrigger and the Tideland and the Fairlead. They had a Weatherly. There was the biggest single story that they didn't have a model that you could see. And so a lot of people are just like, I can't quite do it. It's like just, it has this, it's missing this, it has this, it's missing this. And then there was about 100 lots that were bought by custom builders, Arthur Ruttenberg and Lee. And so people were having to choose amongst this. So they get over there, and a lot of people's criteria didn't work. And if it didn't work, then Waterside didn't work. So that was the problem with that. And then another quick example is Esplanade Azario. So you go all the way up to upper northeast Lakewood Ranch. Esplanade Azario, which was by far the most in vogue, sexiest neighborhood of all time during the craze. This is where everybody went gangbusters. It was the only place of the sort that you can buy into deeded golf in a neighborhood, because all you had was Lakewood National. Everything else was mature. So golf memberships were on super delays. So if you wanted to buy into golf, this was your only move. Then there's 1,500 homes, 800 something on golf and social, the rest on social. And what you got for $600 something for golf and social, and for $400 something for social a month. 16,000 square foot restaurant, multiple pools, there's spas, there's a Bahama bar with food service at the pool. It was a wild offer, but it was in an area that nothing else around it was like it. And it was considered the opposite of Waterside. It was one of the further in Lakewood Ranch to town. So people went there for opposite of Waterside reasons. They went there for the neighborhood, and they made it okay in their head that I was going up there because this neighborhood's so good. So I sacrificed location, I gained neighborhood, because that's in a district that is very family friendly, it's school driven, but that neighborhood's almost a 55 and up without saying it in the minds of the people. Well, you went up there if you loved Azario and it didn't work, which happened to many people during the price out phase. If it didn't work, then your other options fell off the table. There was no other new construction golf that you could do at the quality that you were expecting from that. The other neighborhoods around there were Sapphire Point, which was another Pulte, just normal neighborhood. Sweetwater wasn't built yet. Park East was the affordable version of Esplanade. Esplanade Golf and Country Club could be a move. That was the resale version that was built before Esplanade Azario. Lorraine Lakes was another Lennar. Polar Run was another Lennar. It just wasn't like what people deemed as equal. That's what I'm saying about, like, if you fell in love with one neighborhood, option 2 and 3, it almost made you not want to do it at all. And it's like the people that fell in love with the Lake Club or fall in love with the Oaks and Nokomis, there's not a second one that's right there that you're like, yeah, I'll just hop to here. You have to completely change your perspective. So fast forward now, they build a trillion more neighborhoods in addition to that, right? Say Waterside is 11 now versus 3. But what's interesting is what they built. So they didn't build a bunch of ones that were apples with any of those. They peacocked the whole thing. They tried to appeal to all of the demographics that were missing, which still doesn't give the person that loved the one, it doesn't give them a second or third. It just gives a bunch of people that weren't even in play a first, if that makes sense. So like they had a Vati, which is a more affordable Pulte than even Sapphire Point, but really small models. They even had villas that are larger than single families. So that's a very specific thing that, from what I understand, was part of an affordable agreement for them having the higher end land, is that they can't just make everything really expensive. So I don't know if that's true or not, but the Alcove, which is Neil's signature, is only 46 homes. The HOA is like $500 something. It's semi-custom. It's something that seeks boutique, but there's no amenities. So you got to want something like that. It's Neil's signature is the semi-custom Neil brand. Emerald Landing, which is David Weekley, but it's like they did in Payne Park. It's unique. It's like tall, lean, urban-looking townhomes and villas. Like, they're really cool style, but you're paying a premium for this cool aesthetic that's walkable. It's not single families in a traditional sense. Nautique is similar. Nautique is MI homes, but it's 75% townhomes, the rest single families. It's a play that surrounds this Waterside district area. So, like, again, maybe Emerald Landing and Nautique are more comparable, but like they're not comparable to what already was there that people are missing. Kingfisher Estates is a real boutique, custom neighborhood built by John Cannon, super luxury. Then you hop over the lake, Wild Blue, 505 homes, all custom. Gives you a nice alternative if you love the Lake Club and you want new construction. Stock Development, Lee Weatherington, John Cannon, Arthur Rundberg, Anchor Builders, but more expensive than a random one, and also very expensive and luxurious amenities. Shellstone is going to be Lake House Cove times 2. Lee Weatherington, Homes by Town plus Friends. Monterey is the Isles times 2, which is built down the street. But you get what I'm getting at here. They maybe mirrored some resales that people like loved that couldn't do new. But if you walked back in with fresh eyes, same with up in the northeastern quadrant. If you love Azario and all that, like where's the other one? You know, where's the other one that would give you another option? So I don't feel like it's all that different than it was originally. I feel like more people are in play, but the same people are in play harder. So that's one random thought that took me way too long to say. Secondly, but on that same vein, a couple interesting things that I've been thinking about. Esplanade Azario was, again, the most in vogue. People got burnt out, buyer fatigued by like the arrogance that they were going with this bidding stuff. But I do feel like because of that long-winded way to say that, like, I'm not sure you have a bunch more options if that's what you loved. What I'm saying is maybe you should take a second look at what you love that didn't work for you in the past. Because Esplanade Azario, there's not a replacement option still for it. There's still availability. It's different than it was, but there's still availability. There's way more incentives. And I still don't see plan B. And so I think if you got fried from the process and you think you're out of play, taking a second look to see if you should be in play again, I think would be a really interesting option. I think it's the same thing with like the Toll Brothers with the Isles and Monterey. I think being like why I didn't like it before and why people that left the Lake Club to look at it didn't like it and all that. I think when the rise of prices of smaller builders make that more interesting. I think stuff that I thought was really valuable a while back is also really interesting. Like the Beacon and the Lincoln models in Esplanade Azario were so unique. 90-foot wide lots, which is very rare for this kind of thing. They stopped building them in there, but we sold several that were like, people got them at like 1.2 million. That's what they're selling Lazios at right now in certain respects. You know, the homes they were selling at 650 are now million plus. The homes they were selling at 850 are now 1.5, and the homes that I sold at 1.213, 5,000 square feet on a 90-foot lot. Only build a handful of them. They're selling at 2.21. And I'm not saying that's inappropriate. I think you got to look at like what it should be now versus what it was then. But it doesn't mean the homes still are incredibly rare for what you get versus like other options. So I think looking at that, I think looking at last chance golf homes in Azario, like the Arezzo, maybe the Roma, the ones that they call villas that are just narrow single families with side entry on 45-foot lots. They come with deeded memberships. Do those at $650, $750 right now? Nothing like that. So you're buying a golf membership. I believe you can also rent those 3 months at a time, 3 times a year. So Anyway, food for thought on the second look. I'm going to move on. Another interesting thing is I think communities built ahead of their time. Talon Preserve in Nokomis with DeVosta, Pulte-owned company. DeVosta is Pulte's version of Esplanade. It's amenity-rich Pulte, but a lot of people don't like it. They built Island Walk in Venice too. But Talon Preserve in Nokomis is 7 miles away from Nokomis Beach. It's very close to Venice Beach, not that far from Casey Key, not that far from Siesta Key. It's above Venice Island, which is an attractive location to live if you want to be in between Sarasota and Venice. That came out a long time ago, and then Beach Walk, the sister community, came out, which is really, really close to the beach in Englewood. Beach Walk and Minnesota Key, both of those are kind of sister to each other, but they came out so early, and they were priced according to what the market is probably now, but like 3 years ago. So it was really hard for people to like get the value. Englewood and Nokomis are random locations, but if you look at what Welland Park and North Venice did to the new construction market, if you go back and look on a map, which I'll probably show here, I should. If you go back and look at a map and look at where Beach Walk and Minnesota Key is in comparison to Welland Park right now, how is that not a closer beach version of where Welland Park Golf and Country Club is? The problem is that none of those communities were built when Beach Walk was built. So Englewood was in BFE in the minds of the people, but then Welland Park built all the way down and they built east of it. So what you did was basically you trickled people's minds to say they're getting okay with it, more okay with it, more okay with it, more okay. Oh, South Venice isn't that weird. I'm going south and south and south. And now most of proper Welland Park with downtown Welland in southern Venice is very far south. It's on the border. It's basically in Englewood and Western Northport. Well, then you have a community that was already built that's not connected to it. That's closer to everything everybody wanted. It's closer to the beach already because it's already there. It's a good builder. It's not that far from downtown Welland and not that far from Venice Beach either. So it's got like what Welland Park has, but it also has a better version of the beach in Englewood. And then with the road connections that are going to happen, this is going to be all easier to navigate. So again, the idea of a second look in general, of the stuff that I was really preaching back in the day that still exists that people just forget. These things take 8 years to build out a lot of times. Like, might be worth just taking, be like, what should I look at now? Fresh eyes, fresh criteria. New construction in Palmer Ranch. I've been asked that a few times. Southern Sarasota, Palmer Ranch, above Venice, above Nokomis. That's a mature area. What's called Palmer Ranch is usually fake. Right now, like, I believe Talon Preserve is called Palmer Ranch. It's not in Sarasota. And then even Grand Park is pretty far east. They call them Palmer because it's a kitschy term. Promenade Estates was in proper Palmer Ranch, but I think resales in Palmer, again, would be worth a second look. Southern Sarasota is a good geography town. But I also, your replacement for that idea could be Northern Venice as one part. Northern Venice, Bistera of Venice, Bistera. Bistera of Venice, Vincenza, Silo, Aria, Magnolia Bay. All of those areas, basically, they're building, in essence, like a mirror of Palmer Ranch in a lot of ways, slightly south of it. So Welland Park is below Venice Island, but being above Venice Island in the Venice territory is really advantageous because you're closer to Lake Ranch, you're closer to Sarasota, all the stuff people that wanted historically. So they're building from the interstate to the coast, which is what Palmer Ranch did. So that's what I would do. I'd really look at that. The other thing you could do is look at Central Sarasota, where Sky Ranch is. They're building an area called 3H Ranch, which I covered in video in the past. That's going to be a full-on, it's going to be the size of Waterside. It's going to be 14 neighborhoods. Waterside's like 11. It's going to be, 6,500 plus units, including residential and commercial. There's going to be schools. It's parallel to Siesta Key by 11 miles. It's an interesting area. So I'd look at those two if I was trying to satiate that need of not being on the fringes of Lakewood Ranch and Welland, but still having new construction suburb. Beyond that, one thing that I asked about, I was explaining to a gentleman the other day, I thought would be interesting to relate to the public, is the idea of being not that close to anything in Southwest Florida, but kind of close to everything with affordability by leaning into what other people feel is like awkwardly like in the abyss and winning based on leverage of pricing and being like the stuff that everybody cares about, I don't care about as much. And what I'm talking about is an area called, that's slightly south of the heart of Tampa and slightly north of the heart of Lakewood Ranch, Florida. and it's on the bay. It's called, your keys would be Ruskin, Wamama, Sun City Center would be a great location to be like center in on. Apollo Beach slightly above it, Riverview above that. But that area basically is like, if you get in Sun City Center, for example, you're almost an equal distance to downtown Tampa and downtown Lakewood Ranch, which is interesting. And it sits on the bay, so it's kind of awkward to the beach because unless you have a ferry, you have to go all the way down and up the Skyway to get to the St. Petersburg beaches, or you have to go all the way up to Tampa and go down the Howard Franklin to get to the same way. So it's kind of awkward in like where it sits exactly, even though it looks extremely coastal. But because of that, it's kind of random because the people that really want to be close to Tampa or really want to be close to Sarasota, it's in the middle. And it is a place that they're building a lot of new construction, which is interesting, and a lot of affordable. It's they're building Lennar and D.R. Horton's in there. There's Crystal Water Lagoons. There is the affordable 55 and up brand for Lennar called Medley, I believe. That's there's nicer than I thought. They're building in Apollo Beach. I think it's technically Apollo Beach. So they're building a 55 and up with Toll Brothers. There's a really interesting community called Waterset that I need to cover more. Mixed builder up in that same area. So it's something to look at if you're intrigued by that idea of like not being on the fringe of any town, but being in the middle of both. And if I'm going to be in the middle of any two cities in Southwest Florida, it's going to be Tampa, Sarasota, not Naples, Sarasota, because Naples and Sarasota are sisters. Tampa offers a large metro. All the sporting events, every concert venue, every stand-up comedy that you could want is north, not south. And you still have the big airport. So I want to hug that. If I'm a Lakewood Ranch, I want Tampa, not Naples. Let's say you are moving from Naples. It's a real scenario. And you're in a new construction house. You were like $1 million. Let's say you got hit by that last storm. And so you're a little sensitive to hurricanes again. But you love boating, but you're used to having a 2,500 square foot suburban house. What would you do in Sarasota if that's your sensitivity? Don't want to be on water. Used to own a boat, might buy another one, but also open to rental boat clubs, that kind of thing. And let's say the boat's under 30 feet long. What I would look at there is I'd start south and go north, right? So like if you don't want to be dead set on the water, I think you should lean the other direction. Whether you head a boat or not, what I think you should do is either boat club, or I think you should do probably high and dry storage at like a boat medium kind of place. I don't know if it'd be worth purchasing a slip, but I'd probably do something like that where you can call a day in advance, they drop your boat in the water, they store it dry and safe, but it would allow you flexibility to live 7 to 10 miles away from the water, which in Sarasota is the move because that's the difference between the suburbs and the not. And the not, you're going to always pay double, triple the price for half the space. So to me, it's not worth squeezing into necessarily. If you're open to that, then all of Welland Park, the master plan community, is 18 minutes one way from 4 beaches. And most of these areas are barrier islands, minus like a little bit. So it's going to be intercoastal bay to Gulf. So you got a lot of flexibility there. Nokomis and Osprey are always interesting as in-betweeners the same way. There's a lot of boat slip kind of activity over there. There's new construction. There's you could look at southern Sarasota, go Mature, same areas, right? Mature, Palmer Ranch. I would look at like Sky Ranch and Inn. So I'd really go that 7 to 10 miles, but also all of Waterside would be in play in this conversation too. So just think about what you could get for your money if you were open to disconnecting the boat location from your location. I'd really look at that. And if you're sensitive to hurricanes, it's a non-starter right there in that conversation. And then if you're sensitive to hurricanes, it's probably the metro you pick than being 2 miles further inland because it's just hurricanes are wide. But Sarasota, knock on wood, has done really well compared to the Panhandle, the Atlantic Coast, South Florida especially, and then recently North Fort Myers. So there's an odds game there, but interesting. Beyond that, Mayaca is going to become interesting too. If you haven't heard of the Salida Golf Club, I was talking to agent on my team, Chris Sarah. He's super knowledgeable about all that kind of stuff. But Salida, Soleta, I believe, is going to be John Cannon and Homes by Town. It could be, I think it's John Cannon and Homes by Town. But it's only like 100 homes. Almost everyone you can walk to the clubhouse. It's super custom, but also weirdly family friendly. Right beyond that is going to be Mayaca with the MI Golf Club, which is hyper luxury, invite only, no home or custom neighborhood. But if you're going to build 3H Ranch, you're going to take Lakewood Ranch east, and you're going to continue to extend Fruitville in that direction. then I think the idea that all of these things are in the boonies, including Hampton Lakes with Medallion. I used to be hot on that. I almost moved there, and like, just feels a little far for everybody. But like, if they continue to expand out there, then I don't think people are going to feel tugged. Because what you're considering far is, you're saying far is from downtown Sarasota to the beaches. But one, you might live 2 hours away now, so you got to frame that. But also, if they build an entire town of everything but the beach out there further and further and further, then that's what's already happened. No one was cool with going in Lakewood Ranch at all. They're cool with it now. Founders Club was way far out when I was growing up. Then they're cool with going out there. And then now Waterside seems close because all of Lakewood Ranch was further than it originally. They're cool with going to Esplanade and Zario because they were like, I'm at Summerfield. It's not that much further. They're cool with jumping from Greenbrook to Mallory Park because it's not that much further, but it's because it trickled on you. That's the same thing happening with Mayaca and East Fruitville. That's the country growing up. That's always the country. It's a cool area, but if what's 12 miles versus 14 versus 15, especially if they build downtown centers around it and job infrastructures as well. So I think that's what's going to happen there. And then I think some walkability is going to come back to downtowns if you change what you consider a downtown. If downtown is Waterside Place and downtown Welland, then Emerald Landing is walkable. A lot of the Playmore district of Welland is walkable, and definitely golf cartable. So if you're looking for walkability, if you go after town center, not downtown Sarasota, you can save a lot of money, and there's a lot of cool options as far as unconventional housing if you want to go that route. That is my piece there. Give me 1 second and I'll wrap. Okay, that does it for Florida Relocation Weekly. Again, my name is Adam Hancock. I hope you enjoyed it and found it valuable. Please give me any feedback. You can email us or reach out however you want to. If there was some things you like, some things you didn't, sign up for that monthly report. It's the best thing you can do, like I mentioned several times. I also have done a Southwest Florida wide relocation guide, moving more in the direction of comparisons in that respect. That is now on the website. It will be in the description box below as well. Of course, at any time you can schedule calls with us via calendar. You can reach out directly. Our contact information is everywhere. The sunshinestateco.com is a great place to watch more videos in a much more organized manner than YouTube, to read blogs. And then very soon here, if not already, we will have an audio version of all of these so you can listen in your car and you can separate them a lot more, pause them a lot more, save things a lot more. I think that's all I got. Again, my name is Adam Hancock. This is the Florida Relocation Guide. I own a brokerage called the Sunshine State Company. So if you need any help with buying, selling, and or investing in any real estate needs residentially across the entire state of Florida, especially the Southwest Gulf Coast, please let us know. And most importantly, I really appreciate all of you guys' support. I do not take it lightly. Thank you for taking your precious time to watch my content. We'll see you on the next one.